Joining me by telephone is Adrianne Shapira, Goldman Sachs retail analyst. Adrianne, welcome to Bottom Line.
Thank you. Thank you for having me.
What does crescendo mean?
It's all coming together. Basically, food, apparel, and fuel inflation is going to be hitting the consumer in a more meaningful way in the back half. And so we're expecting all those prices to hit a crescendo for the consumer's wallet in the back half, which I think what we're finding is it could have an impact on discretionary, right? There'll be a reallocation of dollars as there's just not enough to go around for everything to go up.
Yeah, how does that affect the overall economic landscape?
Yeah, I mean, the way we are thinking about it is that, you know, there's two real takeaways: who gets impacted and what gets impacted. Again, we're looking at it from a demographic perspective as well as the sectors. You know, demographically, when you think about where we are in the recovery, we're just not seeing phenomenal job growth, wage growth to suggest that the low to middle income consumer is probably the one most impacted. You know, their wage outlook is not improving at a fast enough rate to offset the fact that they're going to have to pay more for food, apparel, and gas in the back half, and as a result, that low to middle income consumer is going to be impacted.
Adrianne, our Sheila Dharmarajan was just telling us before you came on that the Macy CFO said, quoting here, "I think the concerns about price inflation have been overstated," and the CEO of Kohl saying that he sees significant price increases this year. Are they both right?
You know, I think what you've seen so far to date has been manageable. I think both Macy's and Kohl's have been passing on. You've seen ticket flat to up a little bit, but the real issue is what happens to units. The fact is, today prices are up only low to mid-singles, but in the back half, they're going to be up more like mid-teens. And while both Macy's and Kohl's reported good numbers, you peel it back, margins were flat at Kohl's, down at Macy's.
Right.
And really the source of both beats was really more on the expense line. They're just doing a better job managing expenses than they were expecting.
Well, what's happening to pricing power then?
Well, again, I think for now it's somewhat palatable because, you know, we're still at the early stages of the inflation. It's really more like low to mid singles, and that so far is being passed on. You are seeing some unit degradation. For example, at Kohl's, ticket was up 3%, but units were down 3%. So you're seeing this one-to-one elasticity of demand. And I think as we head into the back half, where prices are going to be up more like mid-teens, I think that's where there's perhaps some vulnerability as to unit demand.
Adrianne, let me ask you about a couple of stocks quickly. Abercrombie and Fitch, organic growth here. Is that why you like it?
We don't cover Abercrombie. Our colleague does. But yes, part of the story has been organic growth, particularly internationally.
Nordstrom, they're coming out after the bell today. How have they been doing?
Correct. Very well. I think getting back to my point in terms of demographics, when we think about which customer is best positioned to absorb inflation, it's the high-end consumer. That's a Nordstrom customer. Their wage growth has been improving at a faster rate. The market's heading to a better place. That, too, helps. And I think when you've looked at in past times of inflation, the high-end retail and brand, they've got pricing power, and that has enabled them to pass on inflation better, and I think Nordstrom is a key beneficiary of that.
And finally, we were talking about Macy's earlier. You see this as a good cost control story, right?
Well, again, I think they delivered tremendous beat yesterday, and much of it was due to SG&A being much better than expected. They are doing a nice job on sales, and they did beat their plan, but the flow-through of that better sales is really what drove the beat.
Adrianne Shapira, Goldman Sachs analyst, joining us on the phone. Thank you so much. We appreciate it.
Thank you.